So, welcome everybody. This is the June meeting of the Forest Business Alliance Peer Learning Network. We're so glad you're here. Just as a little update, we're taking a pause for the summer, so we will not have a meeting in July. And we won't have one in August unless there is a solicitation that CAL FIRE puts out, and then we will have a call to talk about that and support that. So that's our plan for currently. And we want to start, since a lot of people already know each other and it's a smaller group, if you want to just put where you're calling in from and who you're affiliated with in the chat, then we'll capture that way in the chat and anything else you'd like to share. Um, if anyone does have any big project updates or highlights, we'd love to hear those as well in just a moment. And we're going to do, Vance in a moment is going to do a recap of the sawmill workshop that was held last month. And we have a couple other announcements, and then we're going to go to John Azevedo's presentation after that. So before we get into the recap of the sawmill project or the workshop, does anyone have any project updates or anything you'd like to share that maybe has been shared here before and there's updates or just some new information regarding your business and what you've been working on? And this is also, for the benefit of those who will watch the recording.
Well, I could give a bit of an update about what I'm doing.
Great. Go ahead,
Um, I
Jeff.
was I was talking about it a few minutes ago, but not everybody was here. For those of you that don't know, my project, Plumas Wood Fiber, is to create a biomass processing facility in up in Quincy to process forest biomass into a product for horticulture as a substitute for peat moss. And I recently got a grant from the Conservation X Labs program to do a pilot project on this. So myself and a partner, Joel White at Earthworm Soil Factory in Butte County, got a hammer mill, and we're going to be processing ponderosa pine chips into wood fiber substrate and delivering them to people in the horticulture industry to do growth trials over the summer. Because what's going to be really important to horticulture is to know that Western wood species can work for this purpose. So wood fiber substrate's been used in Europe, and there's people manufacturing it on the East Coast with southern yellow pine. But is it going to work with ponderosa pine and the other Western wood species? That's going to be the big question for horticulture. So anyway, with this grant, we're going to produce the samples. We should be cranking up the hammer mill pretty soon. And I've got about 24 different entities in horticulture, from greenhouses to academic researchers and several in between, who want to receive the material and do the growth trials with it. So this is big progress for my project because it will demonstrate the market, and that's going to be essential as I go looking for funding. Any funders are going to want to know that there is definitely a market for what I'm trying to do. I feel confident that there is. The horticultural industry is really positive about this, but getting those letters of recommendation, letters, the commitments to buy, et cetera, from horticulture will mean a great deal. So that's the summary.
Yeah, fantastic, Jeff. Thank you. And Jeff, do you have a website, a link that you want to put in the chat for that?
Yeah, I'll do that. I'll put the
Okay,
website.
that'd be
Uh,
great. Yeah, thank you. And congratulations again.
Thank you.
Anyone else? Any project updates or anything you'd like to share with the group?
We had a win at Forager Fuels. We're waiting for most of our grant applications to hear back. But one of my partners and I applied for one in the state of Louisiana, and we're able to secure that earlier this month. So that'll be
Fantastic.
just over 200,000 to get us officially moving on the proof of concept work. So that's a big milestone for us.
Fantastic. Congratulations. Yeah, nice to hear the momentum. Anyone else?
John, would you please explain what your project is?
I'll touch on a little bit with my presentation today, but it's bioenergy. We're looking at utilizing forestry waste for hydrogen production, and in doing so, trying to dramatically cut down greenhouse gas and carbon emissions and capture as much of that carbon as we can in biochar.
Great. Um, Vance, do you want to do the recap of the sawmill workshop?
I don't know if it's a recap. Do we want to ask the other Vance Russell who that person actually is?
I did, and they didn't.
It's Nina.
Let me
It's
just
just
do
posted in
this.
chat.
That's Nina, Latina.
Oh, Nina.
Oh, is
Okay.
it?
Nina.
Is it? I
Oh, hi,
will
Nina.
go ahead and rename that. Thank you. I'm so sorry. Didn't even realize it.
Somehow
Hi,
one of the links
hi,
comes
Nina.
in.
I was getting
Hi, good
really
morning.
nervous about.
Yes, I can see, I can understand that.
Hi, Nina. It's Jamie. I was wondering if you're going to be here. I'm glad you were.
Yes, I'm here.
Thanks, Nina.
So really quick, the decks from the workshop, and Tom, feel free to jump in since you were there in person and the whole day. The decks are up on the workshops page of the FBA website. If you just go to forestbusinessalliance.org and then go to workshops, the decks from the sawmill workshop, which was the 19th, or no, was it May? No, May 18th. It was a few weeks ago. Anyway,
Last month.
the really great workshop, almost 50 participants, mostly from small to medium size mills. We focused on finance. Tom was actually on the finance panel and gave a really great presentation. And there were several other folks. There was a secondary wood treatments panel and then also a marketing panel. One of the interesting decks also to check out is Jim Haas from Woodland, who will probably get as a speaker at a future PLN meeting. Jim works for a company in Woodland that sells biomass parts, mills and sawmills. But he talked about finance and marketing and kind of integrated the two. It was really interesting talk. So yeah, check those out. It was really great workshop. Lots of overlap from, not just sawmill work but lots of overlap with other businesses in the wood products industry. So we're really happy that went off. We also are running a workshop in July, and I'm again, is it the 23rd?
23rd. Yep.
Which is also on the work, you can register on the workshop page for grant
And
management.
Vance, I have that at 11 a.m. just as a slight difference from the PLN meetings.
Yes, it's 11, not
Yeah.
at noon. So it's
Yes.
not, that's a workshop. It's not a PLN
Yeah.
webinar.
Yep.
And
Yep.
the focus of that is really, you have a grant from, anybody. Not, now what do you do? There is going to be a fair bit in that workshop focused on CAL FIRE grants, like going over e-civis and reporting and things like that. But then we're also going to talk a lot about how do you manage grants, how do you manage funders for that matter, and keep them happy. And this workshop arose out of actually a conversation with CAL FIRE where they were mentioning that people that got grants, the manager changed. They assigned interns to the grants to manage them. They weren't being consistent with financial reporting. All just bad mistakes. Like, you want to pay attention to your funders and keep them happy, and not just pay attention to grant reporting requirements, but you know, do what they need to do. So my puppy's annoyingly barking right now, so I'm gonna cut it short there and put myself on mute.
And don't worry, we couldn't hear the puppy talk, but thanks for
Oh,
that
good, because
recap.
I couldn't, like, I could barely hear myself talking, but all right, I'll hand it back
Yep.
to you, Kathleen.
Okay, thanks, Vance. So we'll turn it over to John, and John's going to present today, and then we'll have time for a Q&A after that. John's a founder of Forager Fuels, a hydrogen BECCS company that will, and he'll tell you more about this undoubtedly, that utilizes forestry slash. He grew up logging and ranching with his family and got a degree in computer engineering and has spent the last 20 years building and growing successful startup companies of all types. Based in El Dorado County, he and the Forager Fuels team are dedicated to lowering forestry costs and environmental impact while growing the state's clean energy production. So, John, did you have a presentation? Did you want to share, or are
I have a
you
few
going
slides.
to
Yeah,
speak?
I
Okay.
can try to
If
share
you,
here.
yep.
Perfect. Thank you for the introduction.
Welcome, John. Yeah.
Is that coming through?
Yep, it is.
Let's see, awesome here. Well, I'll preface all this by saying I don't know, I don't claim to be an expert in fundraising. I've done a fair bit of it, and I think this came about with a conversation with Vance, and I was likely thanking him for all the help that FBA has provided us, getting more familiar with grants and the mechanisms there, and comparing that to venture capital and angel investments, some of the other funding types that I am more familiar with. So I put this together yesterday. Hopefully there's some nuggets of helpful information here, and I'm hoping to learn some too. So please chime in and ask questions
John,
as we go.
can I just interrupt one thing? I'm remembering that we had a poll, a survey to launch with some questions that you had before. So should I go ahead and do that now?
Oh yeah. Yeah, sure. Let's take a moment to do
Yeah.
that if you have that
And then
ready.
we can see kind of what the level is for the audience. So there's 3 questions in this poll. I'll launch it right now. And you will need to scroll to see the other 2 questions depending on your screen. So go ahead and just should be able to just click on your selection, and some of them are check all that apply. So if multiple answers work are applicable.
Should
And
I
once we
submit
get
two or
this,
no?
then what's that?
Should I submit one too or no?
Wait, let me see. Yeah, go ahead, John. Yeah. Might as well. Then we get a whole sense of like who is in the room. And once everyone has completed it, then I will share the results. Just 3 questions, so, but they are multiple choice. I'm guessing Vance and Jim, you're not going to do it. Is that correct? Just because then I'll know we're at 5 of 8 people so far.
Correct.
Okay. So one more finishing
I
up.
did, I cheated.
Okay, you did it. That's all right. Does anyone need just another minute? All right. It looks like those who are going to participate have. So I'm going to end the poll and then I will share the results. So can everyone see these results? Great. So for the first question, experience with fundraising, most people have done some in the past. 40% have currently or plan to be, and 20% no experience. And then also 20% more experience with nonprofit funding. And then what type of funding are you most interested in learning about? 80% grants, 60% equity, angel investing, venture capital, private equity, 40% lines of credit, loans, and 20% revenue-based profit sharing models. And then the third question, your biggest concern. So finding the right investors, biggest concern by far, 100%. And also then the compliance reporting and oversight burden that comes along with that. So with that, now, John, we can move to you. And I think
This is
that's,
very helpful. Thank you for putting that together, Kathleen.
yeah, absolutely.
And yeah, it's
Okay.
encouraging. Hopefully there's a couple of points here that can help. And like I said, I want this to be a discussion. If there's more that none of us know, I can continue exploring it and learning it and
Yeah,
more.
great.
But yeah,
So if you want to go ahead and share your screen again, then
yeah,
it
let
should
me
be
do
all
that
set.
here.
Okay,
Go. There it is. All right, we're back in action.
great.
A little bit of background on me, and this was kind of mentioned in the introduction that Kathleen gave, but I do have a kind of a unique background, I think, in forestry, just because my entire career has been in startups, and this has been some ag tech, some AI. Early on, there was some social media, and more recently, kind of compliance software. But the whole time, ever since '99, my family has run cattle, but ever since I was born, we've logged, we've managed land, we've managed fire prevention. It's just been an odd but fun hobby for us as a family. And you talked a little bit about Forager fuels. I don't intend to go into too much detail today. Certainly, as we keep progressing our proof of concept work, I'd be happy to come back and share more there. Um, but yeah, we're throwing our hat in the ring to see about the utilization of forestry biomass and what can we do to help that improve our environment and our clean energy goals here. So with that, let's get into some of this, and some of this is my reaction, officially moving into the forestry and clean energy space, and certainly Forager Fuels and other businesses that I've worked with, they're not set up like your typical startup, and sometimes VCs can seem like a round peg in a square hole. We oftentimes have more seasonal revenue, more capital intensive startup costs, um, and and there's just limited familiarity in what we do. I find myself having to explain a lot, talking to most common investors. There's just a lot of knowledge transfer before they can even understand this world and this market. And and I think it's not a bad thing either. I think there's maybe a time and place for some of us companies to explore venture capital or angel investors or similar. But I think my goal today is more to explain what are these different options, when will they make sense, and how to approach these different types of investments. So next, I figured grounding ourselves in like who are these different types of investors. Many of these you guys already know. Certainly these first two are familiar. Friends and family can be a great way to get off the ground. FBA is as knowledgeable as I've ever found for grants and the NGOs and government organizations that manage those and provide those. We've got banks and lenders. We're all probably familiar with those as well. Angel investors might be new to some folks. These are private individuals. Sometimes they'll collect together. But this is an SEC regulated thing. There's minimums for income and net worth and some training or certifications required to become an angel investor. Also great for early stage opportunities. Now, venture capital, I'm sure we've all heard about this. I mean, this is maybe the most risky of the folks listed here. Their business model is, hey, if I invest in 20 companies, I want one or maybe two of those to go to the moon, to be $1 billion organization, knowing that the majority of those may fail completely. Time and place for that again, and we'll talk more about that. Corporate investors, might be, landowners or if you're working in mills, large mill owners, it's not uncommon for these large corporate entities to have an investment or a loan arm. and they can be a great fit for the types of companies that are in this space. And then finally, private equity, typically a little later stage in the process, um, high degree of control, high degree of ownership. Their expertise is taking mature companies and helping them grow to be even bigger. Anything I'm missing here? Is this seeing some head nods? Relatively familiar list for the folks. Now, on the flip side of that is how capital is provided, and some of these again might be more familiar than others. Um, we'll start with equity. Equity is based off of a price round, so that means that there's some sort of valuation of the business's worth, and then from there, a deal is made to give away a percentage of that value in exchange for capital. One subset of that, and this has become far more common. Has anybody heard of convertible notes or safes? Is this something you guys are aware of? This has become a very common form of equity investment, particularly for VCs, and a lot of maybe more sophisticated angel investors are using this as well. The safe note was actually created by Y Combinator, which is a venture company and accelerator in the Bay Area, very big. And what this has allowed is for investors to give money without a pricing round required. And so it sort of fits this middle ground where you can get an investment from a VC, and the way it's written is this will convert to equity at the next pricing round. So it streamlines the process pretty significantly. There's a lot more you can read about safe notes, convertible notes. But this is definitely something to be aware of, and certainly, like I said, common in the VC angel space in particular. Debt, I'm sure we're all familiar with. Revenue share, I want to highlight a little bit because it is debt, but it is, and this is something I've been learning more about myself, structured based off of income and profit, not just as a typical loan where you take $1 million and you're paying X amount on a monthly basis for X amount of years. Revenue share is nice if there isn't immediate revenue available, and it certainly it de-risks from the company's standpoint the ability to pay that back when profit is present, and not have to dip into your bank account before then. I won't go into grants much. Again, I assume everybody is pretty savvy there. And donations have its time and place, I think, typically for nonprofits. But this is, my best overview of the different types of structures for investment capital. Questions so far? Is this making sense? I thought I'd take a crack at sort of, as we get into the question of like, where do I go for what, and how do I find the right investors? I'm pretty sure this is accurate. There's some things here that could change a little bit, but across the top are those different equity structures, and then down the left column there, you've got these different types of investors. Pretty straightforward. I think angels and VCs there, corporate investors are going to be big on equity or revenue share. There are several banks, even locally here, that have proven to be keen in the bioenergy and forestry space. So great for loans. Private equity, as I mentioned before, typically a little later on. It's mostly equity, but there definitely will do some debt plays as well. Private equity is certainly more interested, though, in large equity stakes. There can be a time and place for that. But just a quick overview of kind of where to find these different investment structures. So finding the right path. I say avoid equity if you're trying to keep full ownership, but there's certainly another side to that coin. Equity can oftentimes bring, they call it smart equity. So a lot of these venture capital companies, especially, bring a lot to the table with that. And, I think there's benefit and humility for a lot of us founders that may have great ideas and be able to bring the business to a certain scale, but could use a lot of help when things get big, when things get more complex. Um, and that's where, a lot of the equity can actually have some great benefits. Helping to find more leadership, bringing in folks and advisors to help run portions of the company, and really open up doors that maybe otherwise wouldn't exist. Um, Steady income certainly lends itself to loans, or if it's in the short term, rev share can be a big play there. And then ultimately, I think for a lot of companies in our space, obviously grants play a big role. But my guess is that it's going to be some sort of hybrid model, and um, different different stages of the business can open up new opportunities for different types of investment. A couple of things I wanted to touch on here. Some of the challenges. Um, we can talk through some of the terms and challenges around finding the right investor and understanding what do these safe notes mean. What are the strings attached with different types of funding. One big thing I want to touch on, I'll talk maybe a little bit on the next slide too, is really understanding these types of investors and being able to tailor fit your story accordingly. As soon as you get into the equity world, questions like exit strategies and liquidity events come up. And this is basically, how is somebody that's investing in ownership of your company going to make their money back at some point, which can be challenging for Forager Fuels. I don't have an exit strategy. I want to build a generational business if I can. I'm not looking to scale something up and sell it off and make a bunch of money and move on to the next. And that can pose some challenges for us in finding the right investor. Understanding their exit strategy, what their goals are, what their options are for making their money back are key questions to ask, and a key part of the process in finding the right investor that's in line with the business that you envision. The other challenge, I think, sometimes with equity, and maybe most specifically venture capital equity, is if you're not careful with it, you're sort of setting yourself up for uh, more and more of it. You've probably heard in the VC world, they talk about rounds of funding, and it's almost implied that if you start with a seed round, eventually you're going to build and get an A round. And once you're in A round, you're going to start growing more. And then at some point, expanding into new markets might require a B round. And so asking those questions and being familiar with, okay, how does this first investment play into the following? And what it means to be on that kind of round after round venture capital journey, which again has great benefits. I've been a part of a number of successful companies that have gone down that route, but it's different, and it's helpful to understand those differences. Now, something Jeff had said earlier kind of made me think of this slide, and not only how do you find the right investors, but how do you present yourself in the right way and have everything lined up. And this might be, if it's ever of interest, a whole separate presentation on a pitch deck and a business plan and the types of things that these investors are looking at seeing. I thought I'd maybe talk to a few of these items here, but certainly clear challenges, and the solution is huge. Having the right, they call it founder market fit, is a big play, and I think that's founders plus the partners and other experts on there. Now, showing progress is a big portion of it, and especially in the VC angel world, the big word is traction. And that doesn't necessarily mean revenue. I mean, I think it's hard to argue that maybe the best form of traction is dollars in, that's for sure. But the network you're building, the feedback you're getting, those LOIs or letters of commitment that you mentioned, Jeff, all of those play a big role in traction. Certainly product development, proof of concept, pilot sites, all of these also can be a part of that traction story. But that's a key piece of it. Another key piece is the go-to-market. And I'll talk to that a little bit here. Certainly they want to see a big market. You've heard of the SAMs and the TAMs, these total addressable market figures. And I think that's important to include. Every slide in a pitch deck, or every pitch deck should have a slide that includes, hey, here's the total market. If I'm working at mills and my business is creating a product out of the mill waste, then showing the total mills in the US and how many of them fit the size and the specifications of what you're looking for is important. But recently, what I've seen in maybe in the last 5 years or so in the VC world is they want to see a narrow starting point that makes up this GTM term, go to market, right? And what used to be like you'd start by building a minimum viable product with a team, and then you would take that product to market. That story, I think, has been sort of flipped in what a lot of investors want to see. And what I mean by that is it starts with what they're calling an MVA, a minimum viable audience. So you take that big market of mills and you pare it down to the lowest hanging fruit that you can go after. And this is important in telling that go-to-market story. And so for the mill example, you might say, all right, well, our starting point is going to be mills in California of this size working with, let's say, these types of tree varietals. And what that gives you is initial several first steps of who to go after for LOIs, what your initial market focus will be, and it simplifies your requirements for the product by really narrowing down exactly who you're going after, what specific problems they have, and how you're going to solve those specific problems. So back to my analogy, it's starting with a minimum viable audience. And then it's like, okay, what is the team I need? What's the minimum viable team to build and go after this audience? And then you end up with the minimum viable product for that specific audience, not the whole market possibility that you can go after down the road. So I hope that makes sense. I can go into more detail if not. I'm seeing some heads nod, but it's kind of flipped the script a little bit and really put a lot of importance on not only telling that big market story, but where you're going to begin and how you're going to be successful going after those initial customers. Again, happy to come back and talk more about the go-to-market stuff. This is where a lot of my expertise and background has been in, but it's a key part of the story. And then finally, finding investors that truly align with value. Certainly we see a lot of that on the grant side, and they're out there. Blue Forest has certainly done a lot in this space here locally and all over the U.S. as a matter of fact. And there are no shortage of VCs working in carbon capture, working in bioenergy, and working in wood product innovation. I think this is my last slide actually, and I wanted to touch on, I'm by no way an attorney. I've had the pleasure and the pain in some cases of working with a lot of them over the years. And so I thought I'd put a couple of things in here that are a little on that side in preparation for going after investment. Forager Fuels is an LLC. LLCs are certainly most common. But when it comes to angel investors, VCs, and maybe even private equity, Delaware C Corps have become the norm. I can't tell you exactly why from a legal standpoint, the Delaware structure, but it is more favorable and easy to operate if you're going after a safe, if you're going after an equity round. Good news is that it's pretty easy to switch. It's pretty easy to migrate a business from an LLC into a Delaware C Corp, but that might be something that comes up if you're going after that type of investment capital. Another question that typically comes up is around ownership structure, and roles and responsibilities of a founding team. 50-50 is common, but also can pose some challenges. So in the case where it is like a 50-50 split between ownership, investors are going to want to see how does that break down when the rubber meets the road, when there's a when there is a conflict or differences of opinion, what is the structure for that to operate? I highly recommend a book called The Founder's Dilemma. This is geared a little more towards your traditional startup, but I think a lot of the lessons there um, apply to any company with partners, any company with shared ownership. And it does a really good job of really prompting questions and discussions to have early on in the inception of a business that will help eliminate and avoid a lot of the pitfalls and the problems that come down the line with joint ownership. And finally, if there's any intellectual property, a variety of things. This is again a big topic that we can go further into at some point, but making sure that any of the partners, contractors, and certainly employees that you're working with, part of their employment agreement is that their work is going towards intellectual property owned by the company. This will be, I think, important for investors if IP is any sort of kind of important role or part of the growth plan of the company, but definitely something else to think about. Gosh, there's one more thing I'm forgetting about on this slide that I meant to mention, but maybe it'll come to me here. But that's the basics of it. Again, more I can kind of dive into. Happy to field questions and see what parts of this resonate with folks. But I hope that was helpful. Hopefully, there's at least some insights there, and I'd love to take an opportunity to learn from you guys as well.
Yeah, thanks so much for that, John. That was really clear and helpful, and appreciate your experience with that. So, yeah, let's open that up to questions. You're welcome to either put your questions in the chat or go ahead, Jeff. Yeah.
Yeah, thank you, John. You mentioned that you're aware of a certain number of banks that work in the forestry realm. I'm wondering if you could just rattle off a list of those for me quickly.
Yes. I think well, actually, there's probably three here that I'll mention, not all of which are forestry specific. Some of it's energy, some of it's just more local stuff, but I would look into Five Star Bank. I would look into Live Oak Bank. They have a venture arm.
Okay.
The other one that's played, I think, a big role in this area specifically, in a lot of these types of businesses, is River City Bank. So those three, I think, are maybe a good starting point.
Okay, thank you.
John, thanks for the great presentation. For the types of companies, I'm wondering if you've run across or if you've seen folks going or putting together, once they're an LLC or a Delaware C Corp, if they switch into like a B Corp, like a benefit corp
Oh yeah,
organization, or yeah.
yeah. Yes, there are definitely benefits, and even even companies now that are starting in the nonprofit realm, just straight going to a 501(c)(3. I mean, we've seen in artificial intelligence and a number of other
Yeah.
sectors where there are benefits to that. I mean, that opens up a lot more doors. And so, B Corp is a good middle ground to explore. But I think I think the funding strategy can play a role in this. And, if there is a nonprofit potential, if there is the ability to take advantage of some of those, tax benefits and donation benefits, that can be a great starting point, and the precedence has been set to even convert that later on into for-profit entity. And if you get into the VC world, turning it into a Delaware C Corp. I did remember the other thing I was going to mention about the Delaware C Corp. There are other states now that are recognizing the benefits. Like, why are all these California companies and all these New York companies incorporating in Delaware? And the closest one is Nevada. Nevada is in a campaign right now to adopt many of the legal benefits and structural benefits that we found in Delaware C Corps right here next door. Their attempt is to bring more innovation, to Reno, to Nevada as a whole. So that could be another thing to look into, especially if you're located or doing work in Nevada. They're certainly making progress in that realm.
Super. Thank you.
John, I have a question. Thank you for your presentation.
Yeah.
And I'll just introduce myself too. I'm Jamie Winters. I'm with the California Office of the Small Business Advocate. I work with Nina, who's on the CalBiz team. Both of our departments are in the Governor's Office of Business and Economic Development. And our department specifically supports the technical assistance centers that support small businesses. So I'm really just here to listen and learn about what small business owners are contending with in the different spaces. And because I have the North State and Redwood Coast, there's a lot of forestry businesses, biomass going on. So I was just curious, you mentioned about not having an exit strategy for your business and what potential obstacles that might make. And I come across a lot of businesses that do want a generational business. They're not looking to build it and sell it. They're looking to build their generational wealth, pass that on to family, have community members stay for long periods of time and not have to worry about it selling. How would you go about, attracting capital if that's your lens?
Yeah, it's a good question and something that we're figuring out here at Forager Fuels. I mean, beyond the grant stuff, I think the revenue share is an interesting option to combat that. Now, there are other ways you can have an exit round. There are buyback structures. You get talking to VCs. It's not necessarily a showstopper when you say, I don't have an exit strategy. But you need to follow that up with, like, I want to help you find your exit strategy. And I think outside of a liquidation event, outside of an exit, the two main ways I've come up with are, there are buyback structures. So, you can give away equity with a plan to grow the business enough where you can purchase that equity back at some date, and there are mechanisms to do so there. So I think that is certainly one. I've been leaning a bit more towards profit share though. And I think, it's certainly more common to do so. In the venture world, they call that venture debt. And so venture capital, depends on the organization. Typically, they're more familiar with safe notes and an exit strategy based off of equity. But venture debt is a real thing, and that can be structured in a variety of ways. It can be structured like bank debt. It can be structured like a profit share. You can write in, all right, I need 5 years to get off the ground, and then for the next 10 years, here's the profit share, plan that will pay back whatever multiple that venture capital company is looking for. But you have to find the right one. Like I said, the status quo, at least for most of the, and this isn't always, but the status quo is, get as much equity as the VC can, hope that one of them goes to the moon and the others, whatever, that's a write-off. That's that's just a cost of doing business. So you have to be careful with that. But finding the right venture capital partner, and there are several here in the Sacramento area that I think are great. One that I've worked most closely with is the Growth Factory. I've gotten to know those guys there pretty well. My last company they were investor in, and actually I've got 2 companies that they've invested in. But what they do, which I really commend, is they're about bringing that community to you. So you've got all these different resources, networks to pull from, and they offer a variety of structures for their payback. Does that help, Jamie?
It does, thank you. And
Yeah.
the Growth Factory is awesome.
Yeah, good. Okay, good. Glad you're familiar with them.
Hey, it's Tom Maseko just chiming in here. John, really liked your presentation. I would just go back to a point you made, though, really understanding the terms of the investment that you're entering into. As you enter into these agreements that don't require a change of control or aren't selling equity up front, understanding what rights they have to force you to pay them back or to step in to take control of your business. So it could look like, a great plan, a great instrument if you can meet their requirements, but oftentimes there will be something that springs where they're going to take control, or they will force you at a really inopportune time to pay them back. So just really understanding the trade-offs you're making between, there's a cost to
Yep.
having that option to keep control over the long term. And so I think understanding the costs and the terms really important.
Yep. Yeah, I completely agree, and would highly recommend bringing in counsel and other experts to help dissect that when the time comes. Um, and I think, and again, I don't mean to be poo-pooing on equity in general. I mean, I think there are so many benefits to giving up some control in a lot of cases. Like, a lot of these are extremely smart people with incredible networks, incredible ideas. Um, and so there's a time and place for that as well. And I think, a common problem that you see in any startup is, the lack of hubris with a founding or leadership team. And, that can have equally detrimental, impact. So, I think there can be benefits, even to help avoid some of those negative scenarios in an agreement, by getting that help early, and really using these investors, if they're, if it's smart money, to really help you reach those goals, and never get to those less desirable outcomes towards the end there. But yeah, great point, Tom. And I'm no expert on the details, other than knowing that it's worth having smart people around and going through it with a fine tooth comb.
Great point. Thanks, Tom. Anyone else have questions or comments, experiences to
So
share?
if a guy with a really thick set neck shows up at your door and says you have to pay him back by tomorrow, or he's taking a finger, you know you didn't read the agreement, right?
Yeah, that would be a lagging indicator.
I had a question.
Yeah.
Thanks, John. That was great presentation, very concise and super helpful. How, and speaking of grants, I'm curious how should businesses look at grants? My experience of grant making is that it's very non-uniform. It's a lot of heterogeneity in what grant makers are looking for, et cetera. How should businesses look at seeking grants? How much effort to put into that? When, is it at the beginning or just any time? Or, how do you see grants as
I've
a
been trying to figure that out myself. Like I said, the grant stuff is newer to me. I've learned a lot from the folks on the call here, and I don't necessarily know. I think our strategy has been really lean on grants first. Um, Grants can be an incredible catalyst towards private funding, and so, and this has shifted in my opinion. Some of the first grants I wrote, I was going for the moon. I was asking for everything, and trying to get as much of a war chest as I could, and I think that hurt me. And I think that I've since adapted and said, all right, I'm going to ask for smaller amounts, incremental gains. The nice thing about grants is that they come back up, every year. Most of these are recurring things, and it may take 2, 3, 4 tries to secure one. But making it easy to say yes on the grant side. I know, and I'm sure there's examples with companies affiliated here that have taken that grant money and turned it into more angel investment, more corporate investment, and using it to open up a lot more doors. Part of the challenge too is like the timeline of everything, the chicken and the egg stuff. You're submitting one plan, and then there's the waiting game. So I'm in a position now where I'm waiting back for most of my grant money. At least I can say, hey, I got one small grant. We're off to the races. That's been a huge thing to talk about with these investors, showing again that traction, and the progress, and it's a feather in your cap. Hey, these mission-driven grant programs, with smart people behind them, see potential, and that's something that you can take quite a way. So my current strategy has been starting more with grants, um, going small, not trying to ask for the world, and using that to start building momentum, build that snowball, and then have more traction and a more compelling story to tell going after corporate investment.
Cool, great, thank you.
Yeah.
Good
It
question.
works.
Anyone else? Questions or comments or relevant experience to share around this? Okay.
Well, thanks for all the questions and feedback, you guys.
Yeah.
Like I said, I just slapped this together, hoping there's some helpful knowledge there. But yeah, happy to dive into any more of this or any other topics that I can support this group on.
Yeah, thanks for that, John. And we'll share the contact info when we send out the recording for folks on the listserv so that if people want to reach out, they can have that. And thank you so much for coming in and sharing this today and your experience around that.
Yeah, my pleasure. Thank you.
Yeah. So with that, we'll conclude this month's Peer Learning Network of the Forest Business Alliance. And barring any solicitations from CAL FIRE, we'll see you in September, except at the workshop, different from this meeting, in July. So feel free to reach out during this time if you're looking for any support, and have a great summer.
Quick question.
Yeah.
Does anybody know when CAL FIRE plans to announce grants from the last round?
July.
I'd say probably the end of this month, like beginning of July. They seem to take about 2 months usually.
We
Mhm.
one
End
of
of
my
this month
partners,
is about that time.
I got an email back. One of my partners that helped me with the grant sent them a note, and they indicated that it's going to be a little slower than normal this time, just given the volume of applications they've had. So I think we're
Yeah,
anticipating
they only had
more like
$5 or
mid-July.
$6 million to distribute, so
Right.
it's
They got some tough
Yeah.
decisions to make.
Yeah, given the thousands of proposals they received.
And I also wanted to ask that if anybody has any experience or information about this USDA program in rural development called Bio-Based Markets and Development Access Grant Program. If anybody knows about that, I would appreciate talking to them with their experience with that grant program.
Have you put that out to the
Heard of it, I
listserv,
have no
Jeff?
experience. I've
Jeff?
heard of it. I think it's more ag focused but I don't have any experience with it yet.
It is primarily ag focused, but they say that forestry products qualify as an ag product.
Oh, great, cool.
Right.
I
Jeff,
just ran into
you're
this,
welcome. You're welcome to put that question in the listserv. Send an email to the listserv. You might get some
That'd be
responses
great.
that way too.
Yeah,
Okay.
for sure. That's a good idea, Kathleen.
Okay.
Yeah. Anything else or any other questions unrelated to other things? All right. Thanks so much, everyone, for your presence and your time. We are so glad you were all here. Thank you. And thanks so much, John, for that presentation. It was really helpful.
You guys have been so helpful. So happy to give back. Thank you all.
Awesome.
Thanks,
Thank
John.
you.
Everyone,
Thanks,
take
everyone.
care.
Thanks.
Take care.